Good morning, everybody. Yes, it's still morning. This is like the 10th video. We are back. Yes, we back, baby. Yeah. If you know, then you know. And if you don't know, then you don't know. Because I am the millennial investor 1914, because I'm a Sigma. Millennial because I'm a millennial. And I'm one of one time best investors ever. Just playing. Just to the bone horn. Nah, feeling good today. Today, we're going to talk about how to make $750 per month passively. So in order to make that money, you have to find out how to grow your money, how to grow your money fast. And usually when I was in my 20s, I used to do a lot of research on just how can I grow my money fast? How can I grow my money fast? Right nowadays, if you look, it's October 14th, 2023. There's a lot more better, I'm going to say better, but there's a lot more quicker ways to grow your money today than it was, I would say 10 years ago. I'm 34 right now, about to be 35. So 10 years ago at 25, there were ways to make money, to grow your money, but I'm talking about grow your money fast, but then also making sure you have peace of mind that if I put this $10,000 right now, and that for me to not worry about it, will I be able to put this $10,000 in whatever I plan on buying and have peace of mind? Nowadays, with new investors, it's I would say it's a bit scary because we have crypto, we have Bitcoin, Ethereum, XRP, we have Polygon, we have all of the smaller crypto, so you can put $10,000 in either one of them, even the biggest crypto, Bitcoin. You can put $10,000 in Bitcoin, and in a matter of a year, Bitcoin will and can grow 30% in 1 year on the low scale. On a high scale, it can grow as much as like 52%, 80%. I've seen it, right? 1,000%. But then there's times where it's the crypto winners where it could be down 20%, 30%, 10%, and $5,000 to $10,000. I mean, well, no, $100 to $500 is different than putting $5,000 to $10,000 in something and it's going down 20%. Then you get antsy and will, yeah. So again, 10 years ago, it definitely wasn't as many options to grow your money fast. Now in 2023, with Gen Z, Gen Alpha, they have many different ways to grow their money fast. It just all depends on your risk tolerance and your risk appetite. Today, I have two stocks. I like to, in my series, when I show you guys how to make money, how to grow your money fast, I like to give you stocks or ETFs, funds that you probably haven't heard of, so that you can honestly grab a pen, grab a paper, and just write it down. If it interests you, write it down, do research, go on Seek and Alpha, go on Morningstar.com, Zacks, Zacks, the Motley Fool, and it's another website that I go to that I have 4 or 5 different tabs, and I go on Seeking Alpha, I go on Motley Fool, I go on Zacks, and I do research on these stocks. I do research on these mutual funds, index funds, income funds, and I do a ton of research from the morning to the sun goes down just to see basically if I put $10,000 in this said stock or said fund, and in the past 5 years, past 10 years, has it been able to make money? Yeah, now past performance does not guarantee future performance, but I don't want to be a fool and lose my $10,000, lose my $5,000. I want my money to grow, hopefully to $50,000, hopefully to, $500,000 down the line. I don't want it to go to $2,000. So, which segues me to my next topic, growing your money. So when you grow your money, the goal is so in this video, we are wanting to make $750 per month. In order to make $750 a month, you have to basically, you have to figure out. So you start from like an engineer in mindset. You have to figure out, okay, I want to make 750. I want to make, here's my calculator. I want to make $750 per month, which is $9,000 per year, which is close to $10,000 per year, right? And so with that, you're trying to figure this out. You're like, okay, I'm trying to make $750 per month. How can I get there? So the best way to get there is that you see this compound interest calculator, right? So with this, you start out with $1. You said that I need to find an instrument, stocks, index funds, whatever, that if I invest $400 per month into it within 20 years, I need for whatever instrument to grow at least 40%. And then boom, at the end of the 20 years, it's going to be like 10 million, right? But we don't need that. What we need is that we need to go right here. So right here is something called DIVO, which is an income. It's a enhanced dividend income ETF. So typically in my videos, I have Old Realty Income, which pays monthly, JEPI, or you have DIVO. Now DIVO is top notch, not gonna lie. And so right here, DIVO pays out right here 4.91%. It also pays out monthly, so it pays out 14 cents. Also, one share of DIVO is $34.85. So you have to figure out and see how many shares is going to equal to $9,000 annually. So I already did the math, right? I already did the math. So here's the calculator for you. So 187,000 divided by 34.85 equals 5,365 shares. Bear with me, 5,365 shares. Now you scroll all the way to the bottom, and you see that one share DIVO pays 14 cents. So 5,365 shares times 14 cents a share is $751 per month, right? So the goal is that you need to accumulate $187,000. That's the rub. You need to accumulate $187,000 and then dump it into DIVO to make $750 per month passively. Meaning, you dump the $187,000 in that, you get the $750 per month, and then also this also tends to increase the dividend as well. Now, I may not increase it as high as maybe 3%, maybe 1%, 2%, but that's DIVO, right? So now, right here, I'm going to show you the table. So by starting out with $1 and contributing $400, you need to find a fund or a stock that increases its rate of return 40%. Beware and be mindful. Not a lot of stocks increase the annual rate of return more than 30%. It's rare. Some stocks could be like Tesla, but Tesla has been down last 2 years, but it has a higher risk of giving you high returns. So you need to come and think of stocks and ETFs that produce high rate of returns of 30 to 40%. That's going to increase your money fast. We need $187,000, and so we need a fund that's going to increase its rate of return 30 to 40%, and by us contributing $400 into it every month around year 8.5, you will have roughly $190,000. But now the next question is, Cadero, what stocks or ETFs tend, now Past performance does not guarantee future performance. Keep that in mind. So what stocks and ETFs tend to produce 30 to 40%? Apple in the past tend to have done it. Microsoft tend to have done it. But recently, NVIDIA actually has been producing past that. If you do 670, I'm just gonna do it for you. If you do 672% divided by 5, actually NVIDIA in the last 5 years have gave out an annual rate of return of 134%. If you don't believe that, Broadcom these last 5 years have produced an annual rate of return of for the accumulation of the 5 years of 279%, which comes out to a rate of return of 55.8. Now, mind you, will it continue to do it in the future? We don't know. We're just, as investors, we are investing to companies that we feel that's going to be profitable, that consumers are going to continue to buy, and but us as investors are going to reap the benefit. We just don't know. But we still have faith, and we still nibble, and we still say gamble, or you could say bet on yourself. Have faith. Faith without works is that. And so if you were to put $10,000 in NVIDIA or Broadcom 5 years ago, Broadcom alone would have gotten you there. And then NVIDIA would have gotten you there a whole lot quicker. So putting like $400 a month into NVIDIA, putting $400 a month into Broadcom like 5 years ago would have gotten you to your goal. Because then you would eventually would have been compounded, been double, and then you would have had your 187,000. Then you would have took the 187,000. You would have bought shares of DIVO at $34.85. And if you would have waited like a couple days ago, a week ago, I'm pretty sure DIVO was down because the whole entire stock market has been down because before the last week, the market was down like the last 2 weeks. So you probably could have got DIVO at $30 a share, right? And then basically you would have dumped 187,000 into DIVO, and you would have gotten $750 per month passively, which come out to be $9,000 per year. And then guess what? If you would wait just a little bit more, you can buy more shares of DIVO, and instead of $750 per month, you can have $1,000 per month. And then guess what? That helps, because guess what? If you imagine you working your job. So imagine you working your job, you are getting to this money, you are paying $400 into NVIDIA, $400 into Broadcom, and you're working your job. You're doing Uber Eats, you're doing Grubhub, DoorDash. You are staying consistent, and then in a matter of maybe 5 to 7 years, just being consistent, you amass a portfolio of 188,000, 190,000, and you bought DIVO, or you bought JEPI, or you, right? And even Realty Income right now, you bought it, and now you are getting you're getting roughly 750 on the low end to roughly $1,000 passively per month paid out to you. And guess what? You could just use that money right there to pay your rent. Now, of course, rent is a lot expensive now than compared to what it was 5 years ago. But if you are paying $1,500, $1,600 for rent, and this is paying you $1,000 per month, guess what? Now you only have to pay $600 out of your pocket. Or if your rent is $2,000, you live in Memphis, you live in other places that rent has grossly increased. Now your rent is $2,000. You're getting paid $1,000 passive income per month that could go towards your rent. And guess what? Now you only have to come out $1,000. And imagine if you are continuously the money that you were paying for your rent, you took it instead and you put it into back into NVIDIA and Broadcom. Because what happens is that, imagine if you if your mortgage is $1,000 and DIVO is paying you roughly $1,000 per month, and you only have to pay $1,000 out of pocket. If you took $500, $400, $500, and kept putting it back into either NVIDIA and Broadcom, what happens is that you will continue to grow that position, and then guess what? Another 5 years, it probably the position will grow to, because you just spent $180,000, will grow to another $180,000, and guess what? You can sell it, buy more DIVO, and then now your position, instead of paying $750 per month, now it's paying $1,500 per month. Now you really living on a high life now. Now, guess what? Now, if you want to move somewhere, you can. If you want to move to Dallas somewhere or Atlanta somewhere, now you got something that's paying you $1,500 to $1,800 per month passively, right? Passively, and now your rent or your mortgage is being paid. Imagine you got a mortgage that's only $1,200. Now you got something that's paying your mortgage. And then also, what if you want to live out the country? You can. At that point, if you're getting paid $1,000 to $1,500 passively, you could just sell your house if you have a house, or if you are renting, you could just go live in Thailand. You could go live in Pattaya. You could live in the Dominican Republic. You could live in Jamaica. You could live in Ecuador, Peru. You could live in Brazil. You could live off of Copacabana. If you're getting paid passively $1,500 to $1,800 per month passively, and the money is growing, so this is how you do it. So you take a bite of it. You find stocks and ETFs like NVIDIA, Broadcom, SMH, keep that in mind, write that down, VGT. These stocks and ETFs tend to have produced rate of returns of 30% and more, not guaranteed, and more, staying consistent, $400 per month. If you could do more, if you could do $500 per month, if you could do $800 per month, be my guest. You'll be able to hit your goals a lot quicker. You'll be compounding your money a lot quicker, and you'll be able to see, instead of hitting the goal of 188,000, 109,000 in 7.5 years, you'll be able to hit it in 4.5 years to maybe 5 years, because you're contributing more money and it's doubling, and more money you're contributing, and the more it's doubling, more rate of return, more shares you're buying, etc., etc. So all in all, that's how you make $750 per month passively. You do the math in your head, try to figure out what stocks is going to be able to, or ETFs that's going to make you make 30% or more on annualized per year. You look at something like DIVO, JEPI, or Realty Income. You find out the shares that it takes to make said $750 per month, $1,000 per month, and then you just work your way backwards and try to find out how long, by investing in these growth stocks or growth ETFs or growth dividend stocks, how long it's going to be able to take you to hit said goal. And then once you know how long it's going to hit the said goal, then you know how much you need to contribute, and then you just stay consistent, put it as your goal. And then guess what? If you work Uber Eats and Grubhub and you receive a bonus and you receive money from your grandma, guess what? Instead of taking that trip to Miami, to Philippines, you'll just dump it in this. And guess what? You're like, you know what? I'm goal oriented. I'm focused. Get another job. You're making $50,000. Now you're making $85,000. Now you make $120,000. And guess what? Live beyond your means. Dump more into these stocks or these ETFs. Grow your money. Sell it. Put it in DIVO. Put it into JEPI. Put it to Realty Income. Make your money. Boom. Making passive income of $750 to $1,500 per month. And then guess what? If you lose your job, if you don't want to work as much, you can, because you're making money passively. So if you enjoyed this video, I'm hype. Hopefully you guys learned something. Let's get this money. Let's make this passive income. Millennial Investor 1914, the wingman. I'm out. I love it.